Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open and I'm Shah. Good morning, Ida.
Good morning, Neeraj, and a very good morning to all of our viewers. Let's get you the headlines this Thursday morning. Crude prices post a big decline overnight as US stockpiles hit all-time highs. Cognizant posts its first ever loss after a one-time tax expense in the US weighs on its bottom line. 3 drug makers, including Cadila, Glenmark and Taro Pharma, come out with earnings today. And detergent maker Galaxy Sulfaxants gets listed on the bourses.
Well, the day post policy, and boy, was it an interesting policy, Ida. It's a long day as well.
Yes, but interesting policy, interesting to cover. No change in the interest rates, etc. But lots of interesting commentary to mull over. Yeah, and we'll probably talk about that as well in just moments from now. But let's start off with a quick look at the trade setup for the day. Remember, the last few days have been marked by strong outflows. And if you just look at what's happening on the index as well, there are just inconclusive trade statistics. Every point of time when we thought that the market was just looking like it was stabilizing, there came a late hour sell-off, more importantly in the Nifty Bank. But the SGX Nifty is indicating a mild gap up in the session today. So, in a manner of speaking, it's very difficult to take these overnight trades as well. Yesterday, a clutch of trades were indicating that there could be some positions being built on an STBT side, and that wouldn't have worked out well, at least if the early morning trade is to be believed. The change, though, that happened was that the Nifty Bank saw some fresh shorts. Hitherto, in the last few days in the month of February, we've been talking about position unwinding happening on the Nifty and the Nifty Bank and select stocks as well. For the first time, we're seeing some fresh shorts. The OI was up 8% as well, so that's very interesting. Remember, post the policy statement, the Nifty Bank sold off quite a bit. No apparent reason because of the policy, but the Nifty Bank did sell off a bit post policy. What's happened at the broader end of the spectrum? Well, the BSE mid-cap and the small-cap indices have taken support at the 200-day moving averages. I was just looking at all the RSI indicators for the Nifty Bank, mid-caps and small-caps. And while the benchmark indices, which is the Nifty, Sensex and the Nifty Bank, have taken support at the 100-day, the mid-caps and the small-caps have had shot well beyond that, but they are all bouncing off of the 200-day moving averages. Let's see if they're able to manage to hold that bounce as well or no. FIs, though, continue to remain net sellers. In yesterday's session, the provisional numbers indicate some more downtake. They've now turned sellers on a month-to-date basis as well. The first few days were okay. The last 3 or 4 days haven't been particularly exciting. And on a month-to-date basis, FIs have turned net sellers. Keep in mind, just before we get to stocks, that commodities are impacted. It's not just crude because of the stockpiles, but the dollar strength is resulting in even the other metals coming off. So almost all base metals, even gold, in crude, are all of them down in the session today, primarily because of this uptick that we're seeing in the dollar. What are the stocks to watch out for aside of the commodity-based names, which in all probability will react today? You will have Sun Pharma because Taro has reported a weak Q3, and we'll talk in detail about that on First Word as well. But this was a fairly disappointing quarter from Taro. Let's wait and watch what happens there. Shankara Building Products. Now, we've seen enough and more market people come and talk about how they're selectively picking and choosing. When Akash Prakash picks a stock, people stand up and take notice. Amansa Holding has bought about 1.7% stake in Shankara. Remember, it's a stock that's come off from those 2,600 odd levels, if I'm not wrong, all the way to maybe 1,600, 1,650 when the purchase would have been made. So quite a bit of a pull back in Shankara Building Products over the last 3 months. Some bit of bottom fishing being done there by Amansa. Should be interesting. And I thought amongst other stocks, we'll try and touch base with this management as well. But at times you just stand up and take notice of some headline numbers and some operational numbers, even if it's a small cap company or a mid cap company. Excel Industries, revenue is up 60%, but the margins have quadrupled from 5.3% to 21.6%. That's just an exceptional EBITDA performance. The stock, of course, has gone up ahead of the numbers too, but these numbers are heartening. EBITDA up 5x from actually more than 5x to be honest, and net profit too multiplying many-fold. So this could well turn out to be the mid-cap and the small-cap stock of the morning. Let's wait and watch how the reactions are thereof. All right, let's get you what we're talking about on First Word as well. Some important stories to focus on. Well, we'll keep it with the monetary policy for a little bit longer. You know what happened in the policy and all the details. But we're trying to understand the kind of message that you're seeing from Mint Street to New Delhi. It was a tough message hidden behind Urjit Patel's rare smile. We'll give you a sense of what we made of that. Agam joins in with a breakup of Cognizant's numbers, and Darshan will tell us what's ailing Taro and its impact on parent Sun Pharma. Finally, Asian investors seem to have fallen out of favor with foreign investors. We have the data to support that argument. Let me just kick it off with the policy. Well, you know what happened. You know what the policy statement said. But good to look for nuances in the policy as well. And I think one thing which may not be market moving but important for central bank watchers is that you got a very strong set of statements from the governor and his team, which sort of reassert, and I say reassert because there was perhaps no reason to doubt the central bank's independence, but there have been instances over the past, sort of for 15 odd months, which have raised questions about whether the central bank was playing along with the government a little bit too much. In particular, I think the demonetization episode had raised that particular question. But you had very sort of strong independent statements coming in yesterday from Urjit Patel on a number of aspects. The first obvious one was on the fiscal side. And we all expected the MPC statement to take note of the fact that there was fiscal slippage. But, they didn't make any bones about it. They did not cut the government any slack, saying that, they're managing expenditure better, that the slippage is because of the revenue side, etc. So apart from what came out in the statement, Urjit Patel in the press conference made a very, very clear statement that he thinks that there has been fiscal slippage on 3 levels. He said fiscal slippage this year, fiscal slippage next year, and a fiscal slippage in terms of the medium-term targets. That is the 3% objective, which is now not going to be met till FY21. Of course, the statement also talked about the impact of this fiscal slippage, direct impact on inflation, and then also made the point that economy-wide borrowing costs are rising, and that too feeds into inflation. So, I think on the fiscal side, there were a couple of strong statements which sent a clear message to New Delhi. Here, I would like to point out that contrary to trend, you did not see North Bloc coming in and commenting yesterday at all. No word from any of the government officials. As we write in our piece on BloombergQuint.com, is the government miffed or is it respecting the central bank's independence? Well, perhaps both, and that's a good sign. But there were other comments as well. It wasn't just about fiscal. There was a very strong comment from Viral Acharya on liquidity management. Now, just to set you the context before I tell you what Viral Acharya said, remember that after bond yields spiked, particularly the budget-related spike that came in, you had news wires quoting unnamed sources from the government and saying that the RBI may step in to calm the markets through open market operations. That brought down yields, as it typically does in a reactive fashion. But yesterday, Viral Acharya made it very clear that they are not going to, manage asset prices. They will manage the frictional liquidity needs as and when they emerge from an economy-wide perspective and an economy reserves perspective. But we're not here, as he said, except in rare, extraordinary economy-wide circumstances. The goal of RBI's liquidity operations is not to manage directly the prices of any particular long-term asset market. He was, of course, talking directly about the bond markets. Then there was a surprise comment thrown in by Urjit Patel on taxes on capital. Now, RBI governors stay very far away from commenting on tax policy. It's not their purview. But he commented on this in the context of a question which said, why is the investment to GDP ratio not moving up? So Urjit Patel talked about the usual stuff, capacity utilization, etc. And then he threw in this surprise one. He said a litany of taxes, and this is not an exact quote. This is not an exact quote. This is a paraphrase. He talked about the fact that a litany of taxes on capital could be impacting investment and savings decisions. Again, that is not an exact quote. That is a paraphrasing of what he had said. And then the final word came in on the dividend drama. And this dividend drama has been going on since July, when the RBI said they're paying about 30,000 crore in dividend, much lower than what the government had budgeted for. Also lower than the revised estimate that the budget seems to have put in the annual budget, which came in on the 1st of February. So, he was asked that why is the RBI not transferring dividend to the government? Or, it wasn't a very well-worded question. But he said, we always share the dividend with the government. We have already done that for this year. That's something that's done in a mechanical fashion. It will continue to do so going forward. Our fiscal year, as you know, is July to June. So we are currently halfway through the current fiscal year. Essentially, you read between the lines there, Neeraj, and he said that there is no extra dividend going out.
So there were 2 or 3 instances, Ida, I thought, wherein it came out that there was not just an arm's length distance or 2 arm's length distance of sorts, and ample things that people would have hoped the RBI will toe in for the economy, for the asset classes, for the government, and nothing came about.
No, I mean, yeah. So I mean, this is as independent a stance as the central bank could have taken on fiscal management, on liquidity management. You know, on fiscal management, the RBI has always been its own animal, but on liquidity, it sometimes tends to sort of give in because those prices have an impact on the wider economy as well. But I think Viral Acharya now, once through his speech and this, is saying that, look, if asset prices are moving up or down for a specific reason, we're not going to jump in. If there are frictional issues which we need to, tide over, like, there's a sudden shortage because of something or a sudden surge because of something, we will do what we need to do. But we're not going to step in and manage bond prices or, bond yields for you. There was a Reuters story which said that there is a meeting sometime this week or next week or something, the RBI and the government wanting to meet, or the government wanting to meet with the RBI on bond yields. So, it's almost like ahead of that, they're saying, well, what do we do? You guys are, borrowing more. Oil prices are rising. Nothing we can do about it. It's an interesting one, I think.
Yeah, just one small final question. The response that he gave to your question, wherein the delay to 2021, and I thought he made a point that, if we delayed for longer, then it might result in some, not dire consequences, but something to that effect. What did you make of that comment?
Yeah, so I think he said that, look, if fiscal slippage is going to make the task of inflation targeting more challenging, but he also clarified that that 3% number, which was there in the 2014 report, he didn't say it in so many words, but he suggested that it may or may not hold, because since then, between 2014 and 2016, at least, there was fiscal consolidation and inflation levels have come down. So, he clarified that those levels per se may not hold, but the general sense that you have to consolidate fiscally to be able to target inflation, that of course remains true.
Yeah. Well, interesting policy. I presume it did what it was supposed to do. Anyways, moving on from the policy, and I'm sure stories about this policy will probably go on for the weekend as well. But let's move on to more immediate things as well. This is now something that's happened. Maybe, just maybe, technology and pharma could be a couple of pockets to watch out for. Technology, because Cognizant reported, optically an $18 million loss in the December quarter, but that was on account of a one-time income tax expense as well. The key is about the guidance, which I believe they have met, but Agam is standing by with breaking down the quarter and what the guidance indicates and what it means, of course, for the rest of the IT pack, if anything. Agam, good morning.
Good morning, Neeraj. Well, Cognizant for now has advanced as much as 3.5% on the NASDAQ. So it seems like the participants in the American markets have taken these earnings well. That said, the Cognizant, as you put it, has met the guidance, and it is the upper end of the guidance for this particular quarter, which is seasonally weak on account of furloughs. So it's been a relatively steady quarter if you consider the revenues, which moved up 1.6% sequentially, and margins, that is your EBIT margins, remained flat around 17.2%. Now, we did have a net loss, and as you mentioned, about $18 million as against a profit of $495 million. And this is on account of $617 million on the Tax Reform Act, that is the tax outgo. Of course, this is a one-time expense because of the changes in the taxation policy that the US has seen. Coming down, and perhaps the more important factor here is the guidance for the calendar year 2018, and that is where Cognizant has set a guidance of around 8 to 10% growth. Now, if you want to put that into perspective, for Infosys for FY18, and I know that this is backdated, they've had a guidance of around 6.5 to 8 to 6.5 to 5.5, and as far as HCL Technologies goes, that has around 10.5 to 12.5. So Cognizant stands somewhere in the middle, considering it's an Indian company. Again, the biggest area here of concern was the banking financials sector, which still doesn't have too much clarity or visibility when it comes to earnings over the next few quarters, and it's the same for Cognizant. In fact, for this quarter as well, on a sequential basis, it's been absolutely flat. So not too much to speak for, but on the whole, considering the fact that it's met the upper end of the guidance, and the fact that the guidance, at least has some amount of possibility of hitting the double-digit mark for Cognizant, that just may augur well slightly for the relatively larger IT companies going forward.
Okay, let's wait and watch. IT has been in a spot of bother the last few days. Let's see if these numbers by Cognizant tend to revive the day spirits or no. It could well last for a day or probably longer. Let's wait and watch. Another US-based company whose earnings have implications on India and Indian pharma is Taro. The pharmaceutical company reported a weak set of numbers due to rising competition and pricing pressures. Darshan has the fine print and what it means for Sun Pharma and maybe Indian pharma as well. Darshan.
So Neeraj, extremely weak set of numbers. Just to take you through the top line decline was almost 30%. Profit came in at just $18 million. It was down 87%, but this has some one-offs. I will talk about that. Operating margins down 50% and EBITDA margins at close to 40% versus 58.5%. Now, this margins that they have, at least in the last 5 years, is the lowest margin that Taro has actually reported. So, extremely weak set of numbers there. First of all, how is Taro important to Sun Pharma? It is contributing 15% to the overall sales for Sun Pharma and 50% of the US revenue. So a significant chunk of Taro gets into the consolidated books of Sun Pharma. So because of this, Sun Pharma's numbers anyway will be expected to be weak because these numbers have come out. So what went wrong? First of all, the top line degrowth was on account of increased competition and challenging pricing environment. That is something that the company said, and this stays despite a volume growth that the company showed. Apart from it, the forex income that they had was down significantly. It was down just to $3.7 million from $18.5 million because the Canadian dollar strengthened against the US dollar. So that was that. The effective tax rate went up to almost 76.6% from 18 compared to 12.8% due to some one-offs that happened. First of all, because of the changes in the US tax laws, they had to pay in almost $38 million as expenses because of this tax law. But if you take that out of consideration, the tax rate will be almost 23%. So despite, even if you adjust for the one-offs, the numbers are still below what it was, because they said that if you adjust for do all the adjustments, the net income would be almost $55 million. It is still lower than the Credit Suisse estimates of $80 million that was there. So overall, very weak set of numbers. The management in its commentary gave a very grim outlook as far as pricing and competition is concerned, but they say that they will focus on the R&D pipeline that should help them with their margins. The only thing that is helping Taro is the fact that they have substantial amount of cash in their books. Close to $1.6 billion is the cash on their books, which they are not utilizing. So that is probably the only positive that Taro has, that the cash flows seem to be improving. But apart from it, Sun Pharma will definitely react negative to this news that has come out.
Well, thanks so much for that, Darshan. The results haven't been particularly great, but for Cipla, which I thought brokerages like, but this is not something that Indian Pharma needed, Sun Pharma needed. Will react negatively today to these numbers. Thanks for putting that into perspective, Darshan. Now, the last piece on First Word, and this is a story that's, part of this story is 24 hours old, because now almost everybody, let's say everybody knew that EM outflows were strong. And I think the Institute of International Finance already pointed out that EM outflows have seen the biggest since 2016 US elections.
In February.
Yeah, since Jan 30th.
Okay.
What the report from Institute of International Finance suggest. Okay, let me first take you through what they said, and then I'll tell you the difference thereof. They mentioned that EM outflows, the Asian countries have bore the brunt of the flows reversal, with South Korea, Indonesia, and Thailand seeing the biggest outflows. Withdrawals concentrated in equities, while bonds in those regions have been hit less hard, at least in South Korea, Indonesia, and Thailand. In fact, the IIF analysts say that the countries they are tracking registered nearly 4 billion in outflows since Jan 30th, with about 3.4 or 3.6 billion in equities alone. Now, when they published this report, they had mentioned that India was an exception because Indian bonds and Indian equities have continued to see some demand. Now, what has changed in the last 3 days is that India has now joined the party. And just look at the provisional FI equities data. I have the equities data right now. But everybody been talking about it, and I thought it was important to tabulate this. This is what the institutional flows into the Indian markets have looked like. and the 4 blue bars, the 3 large blue bars at the end of the screen shows you how sharply the FIs have sold out of Indian equities in the last 3 or 4 days. Jan 5th, the provisional sell number 1,263 crores. Jan 6th, 2,326 crores. Jan 7th, which was yesterday, 1,022 crores. And the current week, Feb 5, Feb 6, Feb 7, these are the numbers. And the current week marks the worst week for FI flows into India since December 8th, 2017. That was a week in which we had 4,600 odd crores. Mind you, this week is not over as yet. We still have 2 more days left. But already this week is the worst in the last 2 months. And it just shows that if India was not participating hitherto post-budget, maybe because of LTCG, maybe because of other things, but FIs have now started booking profits or selling out of Indian equities in a big way. And that's a stark contrast to what was happening in January. DIs had taken a step back and FIs were pumping in money, almost $2 billion. That seems to be reversing in a hurry. If this week is anything to go by, I think the bulls would only be hoping that what's happened in the first 3 or 4 days of this week doesn't happen throughout the month. It's a short F&O expiry series, but if this continues, it promises to be a very, very volatile one.
So it's an EM-specific trend, and within that, Asia is taking a slightly deeper hit than the others.
Yes, and India wasn't, and now India is also participating.
Interesting.
Well, let's wait and watch what happens during the course of the weeks ahead. But that's all that we have on First Word today. But we have lots lined up on the show. Discuss markets and macros with none other than Samir Arora of Helios Capital. We'll talk about pricing pressures weighing in on Tata Metaliks earnings as well. However, the reported numbers look fairly strong. The Managing Director, Sandeep Kumar, joins in to talk about that. And we talk about business triggers for HEG with Chairman Ravi Jhunjunwala. The duties that have been levied, which make exports unviable or less attractive. How has that impacted business? Ravi Jhunjunwala will join in and talk about that.